We'll get rolling here today, and it's a little gloomy outside, but I got to tell you, we could use a shower up here in Wisconsin. As I visit with producers, a day off here during harvest, really nothing wrong with that, as there's been a good push here over the last month. But let's get to a few things on the markets. We really don't have anything specific, but here's the corn market. I mean, it really hasn't done anything. The red lines go back to Labor Day, and as you can see, we're about a 30-cent range in here over the last 45, 50 days in here. And it just looks like we're probably going to stick in that range in here for right now. I guess the biggest thing we would want to point out with this is that if anyone who thought we were going to see some harvest pressure, that hasn't really occurred at all on the corn side of it. Granted, we haven't broke out to the higher side, but we aren't seeing any harvest pressure, and that will be getting wrapped up in here in a couple of weeks. Here we're going to go towards the crude oil market and talk about inflation here a little bit. And with higher interest rates and fighting inflation, that's just been a key talking point. And our bias is inflation is really driven by energy prices. Everything's really transported relating back to diesel fuel, but we like taking a look at crude oil here. And what we want to point out are the blue bars are where crude oil prices were at a year ago, and the orange bars is where they're at here in 2022. As you can see, when you look at this thing from the February to May time frame, you had crude oil prices that were 60 to 70% higher than what they were a year ago. That's why when you measure inflation compared to where we were at last year, these inflation figures were just out of control here this last spring. As we moved into the summer months, in the June to the August time frame, crude oil was still above year-ago levels, but not as much as what it was in the spring of the year when you had those extremes. We're about 30 to 50% higher. Now get to September and October, we're trading unchanged to maybe 10% higher than a year ago. This is what tells us that this whole inflation thing is really kind of getting into the rear view mirror. I mean, there are other effects on inflation when you look at cost of rent and especially healthcare, but we just think that this crude oil side of it is a big part of it. Our thinking right now is inflation, peak inflation is behind us, and we could get another bump up in interest rates, but by the Fed's decision, that is getting to be nearing an end as well. We want to kind of give you a bullish and a bearish bias here at the grain market. From a bearish perspective, this is an oat chart. Oat futures are trading at their lowest level since the spring of 2021. In the spring of 2021, you had corn in a range of $4.50 to $5, beans $13 to $14.50, and Chicago wheat $6 to $8. So if someone wants to be really bearish, they're quickly pointing to what the oat market has done recently. On the bullish side, though, you have domestic demand. We mentioned earlier on corn, there's good ethanol margins in here, but take a look at the soybean crush. I know this chart's tough to see, but the blue line is current soybean crush, as crushers have margins over $3 a bushel. You can see where these are record high compared to where they've been at the previous 5 years. It is this strong crush margins that's going to put good support underneath this market. And as harvest winds down and producers have the bin doors locked, it is these strong crush margins that tell us that they're going to have to bid up to get beans out of producers' hands. Here, we're going to wrap this thing up. Harvest pressure to us, it really didn't occur in here right now. And then now, as this grain is put away, what will it take to get it out of the bin? Strong crush margins, strong ethanol, I think really gives this market some support. The bearish argument, though, is exports on corn are poor. They're good on beans, but that window is narrowing up as South America is offering beans cheaper for the February time frame. We just think right now, don't get too bullish on rallies. Don't get too bearish on breaks. Our goal is to use spec-inspired rallies into the end of the year to price out soybeans. We think there's a little more support underneath this corn market. Any questions on these markets or suggestions in upcoming webinars, let us know. Have a great day.